Hi, this is Sia Apurva Jaisamha on G for GST. You know what we do? We make videos on GST. And you know what you should do? Hit that subscribe button now. E-commerce has transformed the way we do business in India. I mean, if you see today, everybody is in the business of taking their business online. I mean, either take it online, reach new markets, build new products, attract new customers, and ultimately make more revenue. If you are to speak of numbers, the Indian e-commerce segment is expected to reach $75 billion by the end of 2022. Expectations are $111 billion by 2024, $200 billion by 2026, $350 billion by 2030. That's manifold growth. As the industry expands, explodes, so are the tax complications associated with it. So in this video today, I'm going to detail to you the tax or GST implications on taking your business online. You could be just about any business, probably just selling some clothes online or, restaurant service or providing some hotel accommodation or just selling some stuff through Amazon. No matter what you sell, no matter what you do, no matter how you do, this video is for you if your business has taken the online route. So let's get started. So first, let's get the basics out of the way. E-commerce is nothing but selling your goods online. Commerce made electronic. Now, you could be selling your goods online in either of the two modes. The first is where you host and run your own website and sell your goods on your own website. The second is when you sell your goods via another e-commerce operator. That is, you use the platform of another e-commerce operator such as Amazon or Flipkart or Meesho. You list your products on their websites and through their platforms, your products get sold. Now, the actual complexities in GST get triggered in the second scenario when your goods are sold through an e-commerce operator. GST registration. In both instances, GST registration is mandatory. So even if you have just started your business and your turnover has not exceeded the 20 lakhs or 40 lakhs limit as the case may be, even then, the moment you take your business online, you need to be mandatorily registered under GST. Now, this is because as per Section 24 of the CGST Act, two categories of persons, of the many I am talking about, two categories of persons have to compulsorily obtain a GST registration. The first one is any person who is making an interstate sale of taxable goods. So once your business goes online, obviously you're not going to restrict your sales only to the state where you are located. You're going to, sell pan-India and if also, export your goods. So the moment you take your business online, you need to get a GST registration. Second thing is that the moment you decide to sell your goods through the platform of another e-commerce operator, so you want to list yourself on Amazon or Flipkart or Meesho as the case may be, just as examples I'm telling, you still need to be registered under GST mandatorily. So much so, this concept is ingrained in the e-commerce ecosystem, so much so that these big platforms do not even allow you to onboard your business onto their platform without you first possessing a GST number. So the basics, first thing, GST registration mandatory irrespective of your turnover. And no, you cannot opt for composition scheme. Composition taxpayers cannot do this online business. So you have to take a regular GST registration number one, which means from day zero, you have to do everything that a regular taxpayer does. Issue tax invoices, avail input tax credits, file 2 returns a month, everything befalls on you. Next up is pricing. So once you have obtained a GST registration, the next obvious question is what to do now? So obviously the answer is start collecting GST on all your sales. Here, a very common misconception that most of the entrepreneurs are prone to, I don't know why this started and where this started, but this is a norm that they think it is. They are of the delusion that a registered person needs to collect GST only when the turnover exceeds the threshold of 20 or 40 lakhs as the case may be. No. So let's nip the delusion right in the bud. Once you are registered under GST, and you may be registered in GST for whatever reasons, you have taken a GST registration, you need to start collecting GST from the very first sale itself. You do not wait till your turnover reaches 40 lakhs. So now that it is clear you have to start collecting GST on all your sales, the next obvious question that most of the entrepreneurs come up with is product pricing online. Now, should the product pricing online be inclusive of GST or exclusive of GST? The answer is very simple. It can be either inclusive of GST or exclusive of GST. The law does not lay a straightforward norm in this regard. However, what you have to remember is if your product is inclusive of GST, you have to obviously display that in a very visible and distinct manner. Similarly, if your product is exclusive of GST, this GST component should get embedded at the time of checkout or at the time of generating the invoice or payment of the customer. Now, one important thing that all the entrepreneurs taking their business online need to remember is that if your product pricing is inclusive of GST, or even though your product pricing online is inclusive of GST, at the time of checking out, you have to ensure that a tax invoice is issued to the customers, which is clearly demarcating the value of the good, say 100 rupees, plus GST 18%. So, irrespective of how your product is placed online, tax invoice should contain a clear demarcation of how much you are collecting towards the product and how much you are collecting towards the taxes. There are required to be issued 3 copies of every tax invoice. 1 original for the recipient, 2 is for the transporter, who is literally your delivery partner or logistics partner, and 3rd is for the supplier, that is for you to keep it in your records. Next up is the discussion on rate of tax. Now that it is clear you have to collect GST, now that it is clear you have to issue tax invoice when you do that, the next obvious question that comes up is how much should be the tax that is collected? See here, the very fundamental and basic understanding which is required is that it is just the modus of doing the business which is going online. The underlying product which you are supplying has not changed. So whatever is the applicable GST rate when you sell the good in an offline mode continues to apply when you sell the good in an online mode. So let's burst the myth that there is no universal rate which is applicable for all the products that are sold online. That doesn't happen like that. So your product could be ranging from 5% to 28% depending upon what it is. The same rate continues to apply even when it is sold online. Next question. Who should pay this GST? The business or the e-commerce operator? The answer to this is twofold and pretty basic. See, if you're selling your goods online all by yourself, that is, you are hosting your own website and selling your goods by yourselves, then there is absolutely no doubt about it. You are the supplier, you are collecting GST from your customers. You should only pay the GST to the government. Things get a little trickier when you are providing your supplies through an e-commerce operator. That is, you are listed as a merchant on Amazon or you are listed as a merchant on any other e-commerce platform. Then things get a little trickier. Here you have to remember that in GST, there are a few services, mind you, services only, which have been notified as e-commerce RCM. That means if these services are supplied, if these notified services are supplied through an e-commerce operator, then the responsibility to collect and pay GST rests on the e-commerce operator and not the business online. Such notified businesses are goods transportation, passenger transportation, utility services, hotel accommodation, and a recent addition into this list is restaurant services. So it is only and only these notified services are the instances where the e-commerce operators will pay GST on behalf of the suppliers. Rest everybody has to collect and pay GST from their customers by themselves, even if they are providing their goods and services through an e-commerce operator. Next up is the discussion on the paradigm of ITC for a business that goes online. So the concept of input tax credit is not something that I'm discussing now. I'm discussing its implications when a business goes online. So absolutely there is no change and no restriction when a business goes online. So just like any other business, even a business that is selling goods online is going to receive invoices from the suppliers for purchase of goods and for varied types of services and some, and also different types of operational expenses, etc., etc. Whatever is the GST that is paid on all these purchase bills, whether it is goods or services, you can claim credit. There is absolutely no explicit restriction on claiming of credit merely because a business has decided to go online. So, whenever a business goes online, it is but natural that the e-commerce operators who are hosting your business, who are providing you a platform to display your products, are going to charge you some commission or some platform usage fees or some facilitation charges and several other different varied nomenclature is there in the industry. But the underlying fundamental concept is that the e-commerce operators are charging you some money for as commission or as their fees. Now, these e-commerce operators are also registered under GST and they will also charge GST on this commission slash platform usage fee that they impose on all the merchants who are onboarded on their platform. Now, putting yourself in the shoes of the merchant or the entrepreneur who's actually taking the business online, whatever is the GST that is paid to these e-commerce operators on their platform fees or on their commission is also eligible input tax credit for you. It is just an input service that you are using in the course of furtherance of business, so you can claim ITC of it. The next topic up for discussion is issuance of tax invoice. Now that's pretty basic. Once you're registered under GST and you're making sales, it is but required and mandatory that you issue tax invoice for every sale that you make to your customers. We have already seen that there are 3 copies of this tax invoice that need to be issued. Now here what is essential and needs to be practiced is that all the invoices that you are issuing have to be in a consecutive serial number. So you may follow as many invoicing sequences as possible depending upon the requirements of your business and products of your business, but nevertheless, irrespective of how many invoicing sequences are followed, once a sequence is adopted, all the invoices that are issued in that particular sequence have to be serially numbered. Now, if you're selling goods through e-commerce giants, then they also provide an automated invoicing solution to all their merchants. Nevertheless, it is also necessary for you as a supplier of business to ensure that irrespective of what invoice you're issuing, whether in an online mode or in an offline mode, a sequential invoice number is practiced. Returns and refunds. Now, once your business has gone online, it is but natural that there are going to be some unhappy customers who want to return the goods, and naturally, you are bound to refund them whatever monies that you have collected. So, operationally, while this could be very simple as to just hit a reverse button and reverse the transaction and sanction a refund, it is important to discuss what happens to the GST that has been collected by you from them when you originally sold the product. So in this case, when you actually sold the product, you issued a tax invoice to collect the GST. So now when you are actually getting a sale return and refunding the amount, you have to refund the amount including GST. So whatever GST you have collected from your customers should also be given back to them. And B, in order to evidence and document this transaction, you have to issue a tax credit note. So whenever there are refunds and returns involved, refund the full amount to the customer and issue a tax credit note. This tax credit note also has to be duly reported in your GST returns to ensure that whatever GST has been paid at the time of issuing a tax invoice is nullified and coming back to you. GST TCS. In the whole gamut of taking your business online and becoming a pan-India brand and getting lauded, things get more complicated when you're selling your goods online through an e-commerce operator, especially because GST TCS gets triggered. First things first, GST TCS has got nothing, absolutely nothing to do with income tax TCS. These are two extremely different, varied, distinct concepts. Now, the provisions of GST TCS get triggered when A, you're selling your goods online through an e-commerce operator, and B, when the consideration for such sale is first collected by the e-commerce operator and then paid to you. So, e-commerce operators are expected or are required to collect 1% TCS on the net value of taxable supplies made through them by, so many suppliers. So, whilst you are, happily making your supplies through e-commerce operators like Amazon or Flipkart, and you are expecting your wholesale consideration to come and credit into your bank account, it would not be so. These e-commerce operators will withhold 1% of the net value of taxable supplies and remit only the balance to you. Now, where does this 1% go? Subsequently, these e-commerce operators file another return called GSTR 8. Now, in this GSTR 8, these e-commerce operators mention GST number wise, supplier wise TCS that has been collected. So once these returns are filed by the e-commerce operators, whatever is the TCS that was withheld by these e-commerce operators out of the consideration payable to the merchant is now outrightly available as cash credit to the merchants on their GST portal, which they can use at the time of filing their GST returns. Now, the entire concept of GST TCS is actually very tricky and complicated and is an entirely different line of study, probably for discussion on another day. Nevertheless, it is necessary to be aware about this provision that you are not going to get your whole money from the e-commerce operators. They will withhold 1% and give you only the balance. TCS is not applicable when GST is paid by the e-commerce operator only on behalf of the main business. TCS is not applicable when you are selling goods through your own website. TCS is not applicable when the underlying sale of good itself is exempt from GST. TCS is also not applicable when the consideration, that is the price for sale, is received by the business directly from the customer and not routed through the e-commerce operator. TDS under Section 194O of the Income Tax Act. Now, amidst so much that is already happening in the e-commerce space and from the GST perspective, the government introduced Section 194O in 2020, which is exclusively applicable as TDS to be deducted by the e-commerce operators from the payments that they are making to the e-commerce participants, that is the merchants, that is the entrepreneurs who are taking their business online. This 194O TDS is required to be deducted at 1%. However, this TDS is not required to be deducted if the merchant who is supplying his goods online is an individual and the total value of his supplies made online is up to 5 lakhs only. The merchants, that is the businesses or the entrepreneurs, are required to submit their PAN card and Aadhaar card for this purposes. And in instances where the merchants do not furnish their PAN card, then TDS will get triggered at 5%. Now, whether it is the GST TCS under Section 52 of the CGST Act or the Income Tax TDS under Section 194O of the Income Tax Act, provisions like these help to bring more and more taxpayers into the tax ambit. And this helps the government in tax administration, reducing revenue leakages, discouraging parallel economy, improving payment digitizations, and ultimately, ensuring that there are no revenue leaking checkpoints. So that's about a billion things when you sell your goods online. So taking business online, while it is a very big milestone for some businesses, keeping a check on the tax implications when you do so is extremely important. Now, we hope through this video, we were able to give you at least a tiny glimpse into what happens and what are the tax complications associated when you take your business online, whether it is in terms of taking a GST registration or how many tax invoice copies have to be issued or how GST TCS functions or how IT TDS functions in this space. We hope we were able to do a little justice to this extremely confounding tax topic. Nevertheless, you know what you should do to stay top of your GST feed. Subscribe to my channel and hit the bell icon, like and share this video.